Will Bitcoin continue to rise? If you're interested in knowing more about this, please keep watching. On May 6th, there will be a seminar at Kaohsiung Palace with the theme, Profitable Trading Using Quant Trading with YouTuber Crypto. If you register on that day, you can receive a $10 bonus. It can be directly withdrawn, without KYC verification or deposit requirements. It's a direct reward to all participants. There will also be a lucky draw for a PSVR2 Horizon Call of the Mountain bundle, which is a very cool virtual reality experience, as well as some trial funds. Okay, if you want to register, please click the link in the comment below this video. Here, there's a Google form. Click it and register. Admission is completely free. Also, there will be very favorable activities and exciting content on that day. Create a KYC verified account on Bybit. Make a $500 deposit, and you can get a $1,000 Ethereum position. Today is the last day to take advantage of this opportunity. Starting tomorrow, there won't be any chance to join this event. If you complete KYC and deposit $500, you can receive $1,000 worth of Ethereum positions, and you can choose to go long or short. This is truly the last opportunity. All right, let's go back to the Bitcoin market. From the weekly chart of Bitcoin, we only need to focus on one thing. Only pay attention to one thing. That is whether Bitcoin will continue to rise after reaching a level close to 30,000. Has this temporary bullish trend ended or not? I believe this is the most critical question we need to answer. And it's the key question to determine our next move. The one and only, which is whether this bull run has ended or not, and whether it will continue to rise. To answer this question, we can look at the previous temporary bull market and the peak of the past big bull run. What signs do they have in common? And do we have the same sign now? Well, we can use an indicator that we rarely talk about in our channel. We don't talk about indicators much on our channel because I think indicators have too narrow of a focus. If trading can be done well by relying solely on one indicator, then why not just use a robot? A trading bot is so disciplined. It strictly follows the rules, controls positions, and doesn't have any emotional ups and downs. So, I think indicators have a relatively narrow focus. In terms of analysis, they can be considered. However, they are definitely not the only decisive factor. Let's take a look at this indicator. This indicator is still effective. You can see that the highest price point in the past bull markets coincided with the highest point of RSI. In the earlier stages, when we had a divergence here, the BTC price gradually peaked, signaling the end of the current bull market. This was also the case during the 2017 bull market, which many of you may not have participated in. 2017's crypto bull run, when RSI was about to peak. It was the end of the bull market. The same goes for the previous temporary bull run. They are the same. In the previous temporary bullish trend, when the RSI reached its peak, the temporary bull run ended. Now, let's take another look. Before I start explaining the indicators, I always understand how the indicator is calculated. Indicators are simply calculated using OHLC of candlesticks, along with some basic arithmetic operations. The RSI indicator is very simple. Its formula is straightforward. However, I have a deep understanding of it. I'd like to share my own interpretation with you. Okay, here is the formula, which is straightforward. This is it. Within a certain period, you have both the average gain and average loss in the denominator, and the average gain in the numerator. What's this 100 about? The 100 is used to normalize the result to a value between 0 and 100. You will get decimals after the computation. After all, the answer will be in decimals. To make it easier to compare and distinguish, we multiply it by 100 to make it a number between 0 and 100. If this number is close to 100, what does it represent? It means, this is my personal definition. This is my personal definition, mind you. At least I haven't seen anyone else interpret it in this way. It represents the proportion of the gain in the past period of price volatility. Okay, so with this definition, we can interpret it in this way. At that time, when the price reached its peak, the RSI reached 70%. What does it mean? This means that in the past period, which is based on 14 days here, the proportion of the gain in the price volatility of the past 14 weeks had reached 70%. This is the meaning of RSI. And also this position. This position is not the top. of a bull market. But it is the beginning of the distribution zone. The RSI has reached. Let's find out the RSI for this position. It has reached 94. What does it mean? It means that in the past 14 weeks, in this fluctuation range, the proportion of the gain is 94%. You can imagine that it is already at a peak, and it is already crazy, because the proportion of the gain has reached 94% in price volatility. We can apply the same definition to the previous trend. In the previous temporary bull run, the RSI reached 80, which means that in the fluctuation range of the past 14 weeks, the proportion of the gain was 80%. And now, it has reached 70%. Right? Actually, I think we still lack a crazy top. We still lack a crazy top. This top usually occurs when the proportion of the gain in the price volatility in the past period is big. When the price reaches the top, there will be a process of rising every day, and it won't oscillate after the rise. Usually, it won't be like this. If we want to reach the top, everyone is optimistic about the market at the top, and all indicators and technical analysis methods will give bullish signals. Now, I think we have not seen this situation yet, and we have not seen this top. We will reach the top in the fluctuation range of the past period, and the proportion of the gain will account for most of it. At this point, I will think that our temporary bull has really come to an end. It is almost over. Otherwise, there won't be such a sign. I think there is still some room to go up now. Okay, let's move on. Let's switch to the daily chart level. On the daily chart, you can see here that some people draw a 0.618 Fibonacci retracement as a rebound from this position. Let's analyze the point of view of this plot. They think that it's a downtrend that started from this point, then rebounded. If we only look at the real body, the rebound to this position is indeed 0.618. Then the price goes downward. They will think that the current upward movement is a rebound. In my opinion, this way of drawing is wrong. We cannot interpret the market this way. Reason? Because the premise of using Fibonacci retracement is that we are in a downtrend. In Fibonacci retracement, 0 and 1 serve as bottom and upper anchors, respectively. It means people who plot it like this think that the price is currently in a downtrend. That's why they draw it like this. Now, let's compare the situation. Actually, this is the trading volume when the price was falling. This is the trading volume when the price was rising. You can see that the bull in this uptrend is not inferior to the bear. The bull is not inferior to the bear. Therefore, defining the current trend as a bear market is strange, since we can't perceive the current market as a bear market. Drawing a Fibonacci retracement like this is unreasonable. It doesn't make sense. Indeed, when we were in this position, and this position, we expected a retracement. I think this retracement, this part, here, has come to an end. It's come to an end. At least, I think that the next bearish trend, where we can make a short call, will be less likely to occur. Instead of waiting to go short, I prefer to choose a good timing and a good entry point. Wait for a breakout opportunity to go long. You can see that we are now at a critical point. We have come to the vicinity of the downtrend line. There have been quite a few contact points in front of it, which I think is valid. These points, as you can see, if the price breaks out this line here, hold on. Let's change the color. Any breakout here will be a good opportunity, I reckon. It may be a very good opportunity, because you can see that during this uptrend, where the price oscillates, you might think that there's a small drop, but the volume has decreased significantly. We can wait until next week to see if it breaks out of this range. After all, we've been oscillating at this level for a very long time. The price has oscillated around here for a very long time. And this kind of oscillation can be very frustrating for trend traders. It's been over 40 days, which is already quite enough for this consolidation phase. For a consolidation box like this one, over 40 days is already a long time. All right, thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.